What's up, guys? Jarrell Coleman here, coming to you with a quick video today. I want to show you my 5 key factors you can use to find a perfect entry to get into a trade. I am currently analyzing GBP JPY, my favorite pair, my main pair. Of course, I've been trading this pair primarily for over 2 years now, so I'm very familiar with it, the ins and outs, the characteristics, the mannerisms and whatnot. And right now I'm tracking this key area of resistance, which I have labeled R1, or resistance area 1 of 7 key lines on my pivot points. And looks like we're going to get a breakthrough before 12 p.m. Of course, that being key because I'm EST standard time. London market closes at 12, which will more than likely cause a range or a retracement or a detour, as I like to call it, and whatever the current trend is. So I'm looking to get out of this trade or look for some kind of confirmation to stay in it before 12 p.m. I was hoping we get a breakthrough of R1 prior to that. Our next ceiling would be R2, 138.01. So that'd be the next area I'd be looking to cash out at if we can clear this line. But moving on, as we were just talking about support and resistance, that's going to be number 1 as far as our 5 key aspects. Aspect number 1 is always support and resistance. In my opinion, pretty much the foundation of what you need to know to find success in the Forex market. If you can understand how support and resistance works, how to find the floor and the ceiling above and below the current price, and then just figure out which one you're headed to next, is going to eliminate a lot of the confusion for you. Make it a simpler process. It's basically A or B, we're going up or down. You're looking for confirmations in either direction. So when you're using support and resistance, it's a lot of ways you can do that. You can always come up to the daily time frame and draw channel lines and horizontal lines, perpendicular lines, diagonal lines, to figure out when these channels are broken. You can just monitor the candlesticks. If you're good at looking at angles and see when a channel is broken, you can look at the hammers on either side of the candlesticks and use the candlestick structures. One of my favorite ways of monitoring support and resistance, because what I like to do as a trader is eliminate as much user error possibility as possible. So as far as using hand-drawn tools, I usually only use horizontal lines for the most part and line them up against the candles, or I use pivot points to tell me where those areas are without having to go hand draw those lines on my own. Another way I like to monitor support and resistance areas would be the cloud of the Ichimoku. And of course, if you watch the rest of my videos, you know there are numerous ways you can monitor these areas in order to know when you're getting a breakthrough, when you're getting a rejection. And of course, this is going to be one of the best ways to get a great entry on your trade, is using a breakthrough or a rejection area for support and resistance to get your entry or to get your exit once you're already in profit, as well as where to place your stop loss. As far as finding, if you're talking about a buy, you're looking for resistance for take profit, support for stop loss, and on the sell, it's just completely the other way around. So moving on to factor number 2, we have trend trackers. Now, once again, you can draw channel lines, track these trends, or you can just see when the candles are creating higher highs, lower lows on different time frames, finding different perspective, or what's called confluence, to use these different time windows to paint the bigger picture of what's going on overall. So let me just check the progress on this trade. Okay, so we're in profit and we are still looking good. Come back over here to the education side. Now my trend trackers, of course, I have the alligator, I have the parabolic SAR, we have the baseline cross, the conversion line crossing the baseline on the Ichimoku. We have the color of the Ichimoku cloud. Various factors you can use. You might use a moving average cross, gold cross, death cross, wherever the indicator or the rule, or what I like to call the confirmation, is to give you a hint or a signal that you should enter a buy or a sell, these are going to be your confirming factors. So for trend in particular, you're basically just trying to figure out whether the price is headed up right now or whether it's headed down right now with more momentum. And once you have isolated the floor and the ceiling, if you're headed up, you know you're headed toward the ceiling. If you're headed down, you know you're headed toward the floor. But you just combine that information together with the other three factors in order to make the best decision. And coming along to most important factor number 3, you have your volume. So if you use TradingView as a charting supplement like I do, you're going to notice that you don't have any volume bars down at the bottom. And if you try to apply volume as an indicator, it's more than likely going to tell you it's not available through the supplier or something of that nature. So when you are talking about volume, you're only going to see volume when you're trading through your broker. So if whatever your trading terminal is, if you use MT4, if you use broker specific software, that's where you're going to see the volume, because it's specific to the channels that the broker has available to them as far as how much volume is being traded. But that factor, basically, you want to keep an eye on when volume is high and when it's low. When volume is low, you can expect a range. When volume starts to pick up, you can expect the price to begin to trend. So if you've been tracking a trend in one direction or the other, trying to figure out when it's going to start heading towards the floor or the ceiling, or if you're going to get a breakthrough or not, just take a look at the volume bars. And more than likely, when you see volume spike, and of course you have to use Confluence to look at the different time frames to get a better picture of this, but never just rely on one time frame. Never do that. But when the volume spikes, you can expect the bigger moves or the larger candles, and of course the higher the time frame, the more the candle is worth. But pay attention to the volume factor number 3. Now for factor number 4, we're going to come back over here to the internet, because you need to use the economic calendar or economic data fundamental analysis. So that's the wrong URL. There we go. So before you start trading, before you enter any trades, especially on a new day, you always want to pull up the economic calendar, see what's been released so far that day and what's coming up. You want to avoid trading pairs that have countries releasing high priority news that day, or be prepared to leverage it, possibly exit a trade before it releases. And that's going to depend on whether you're a short-term or long-term trader. Long-term traders don't normally let the news dictate their analysis or what they're aiming to do. Short-term traders is going to play much of a bigger role for you, because your stop loss could likely be triggered by a high priority event. This morning in particular, we had a G7 call on the coronavirus. So whenever you see things pop up that don't happen too often, you definitely want to pay attention to that. And then ADP employment change dropped after that. Not too long after this news came out, I got a notification from one of my apps letting me know that gold had hit a new low, or one of the lowest lows in weeks or months or something like that. And I'm sure it was due to the fact that this high priority news came out and caused some kind of a reaction. Now normally, actually, yeah, so the ADP was good today for the US dollar. It strengthened the dollar and weakened the gold. I was getting ready to say normally when the US dollar has bad news, gold would shoot up, so that didn't really make sense. But I was looking at this red, and over here on the left hand column you see this is the previous stats. So last time ADP came out, it was bad news for the dollar, which weakened the dollar. This time the numbers were a lot better, so ADP and employment change actually improved. It caused the dollar to strengthen, and that's why the gold dropped the way it did this morning. You can also see these are medium priority events, but all events for the dollar that had good news. So Had I been trading the US dollar, which isn't one of my primary sources of income, but I do trade the dollar, Euro USD, or I'll just trade gold versus the dollar, this would have been a great opportunity to catch that downtrend on gold or a downtrend on Euro USD, because I'm sure that trended down as well as USD gained strength this morning. So it's always why you want to use the news as key factor number 4. And then my key factor number 5 is also fundamental data. I really wish I could pull this up on the screen so you guys could see it. I'm gonna just come back over here on the chart so we can check the process on the trades. So we're doing good there, still in profit. You can see my entries are here and here. The price is above those on the buy, which is the reason I'm in profit. And if we counted the pips from my entry to the current price and multiplied them by the lot size, it would give you the profit over here and show you why my equity is higher than my balance. But key factor number 5 is the strength meter. Now, this strength meter right here in particular is only available for iPad. It's got 4 time frames on it, so I can monitor the strength in 4 different time frames, the same way I like to monitor the charts in 4 different time frames, like I was saying earlier, to get that confluence, paint me a better picture of what's going on. But you also have a version of this strength meter, FX strength meter, on iPhone. I have a video on this strength meter, the one for the phone, as well as currency heat wave. If you go and check those Forex applications, the Forex apps video, all my favorite apps for trading Forex. But you got currency heat wave for the phone that'll give you an idea of which currencies are stronger, which currencies are weakest. But this one in particular is my favorite because I can see the timeline of how things are progressing. And the way I have this one set up, I can monitor the strength of all currencies, as you can see up here on the option up here, and it'll just look crazy with a bunch of lines. But I'm only looking at the 2 countries that I'm trading the pair for. So with GBP JPY, I got my pound and I got my yen. Whenever the pound is stronger than the yen or higher rating than the yen, you can expect the price to go up like it's going up now. And you see all of those red lines heading straight up because the pound is surging and really strong right now, which is exactly why I'm profiting off of these buys on GBP JPY. I hope that makes sense. When JPY is stronger or higher rating than GBP, you're going to get a downtrend. So strength meter, key factor number 5, you combine all 5 of these factors and use confluence with all the time frames to paint you a good picture of what's going on, and you're going to be able to make good decisions to put you in the profit, as well as know when to get in and out of the trade. Like right now we got this big wick on top of the candle, but I'm only on the M5 time frame. My structure still remains. I'm gonna come down because I don't like the momentum of that candle. I would expect any second now we'll get the parabolic to drop up above the price on this M1. That would be the first sign that I might need to close this trade out, especially so close to the end of the London market. But let me get back to monitoring these trades, making sure I close these out with good timing or let them ride if I need to. If I did decide to close these out because I'm a short-term trader, I would basically just take profit now and then look to get back in at the next peak once we cross the previous high. But more than likely, I'm gonna stay in these trades unless the structure starts to turn around on me, M1 and M5. Eventually, it will make its way up to the M15, but once again, that London market is getting ready to close. But I'm gonna make a decision process here. I hope this video was helpful for you guys. Appreciate all my viewers. If you are new to the channel, make sure you hit that subscribe button. Make sure you hit the bell to make sure you're notified every time I drop a new video. I'm also gonna start going live soon for you guys, doing live trading sessions right here on YouTube. If that's something you would like to see, make sure you leave a comment on this video and say, Jarrell, I love to see you go live and trade. So I'll catch you guys next time. Appreciate you. Not lucky. Happy trading to you guys, but good luck.